would now like to introduce the speakers for our second business session on the regulatory and supervisory aspects of NBFCs. We have with us Sri Madanlalji Gundecha, a chartered accountant by qualification. He has over 4 decades experience in automobile finance, and he was the past chairman of Madras Hire Purchase Association and the South India Hire Purchase Association. He is presently co-chairman of FCA and EC member of FIPA. With vast and rich knowledge, he is also an active angel investor. We also have with us Deepak Ji Mehta, the Vice President of FIPA. He is the Managing Director of Apna Finance India Limited and Director of Prem Hire Purchase Limited. He has an experience in asset financing for over 26 years. He was also the past chairman of South India Hire Purchase Association. Our third panelist, Sri Anil Doshi, is a fellow member of Institute of Company Secretaries of India and is in the field of practice for over a decade. He is also a law graduate and he has completed his LLB 5 years ago. He is a company secretary in full-time practice and currently pursuing the Registered Valuers course. His area of practice is corporate compliance and has a clientele of over 160 companies and LLPs. He has some of the prestigious entities he has served as Foxconn Technologies, Easy Access Financial Services, Fuso Gloss, PS Group, etc. I request the panelists to please come on the dais, and I hand over the proceedings to our moderator, Madanlalji Gundecha. Thank you, sir.
Good morning. I would like to use Hindi, Tamil, English. I would love to talk Malayalam. I don't know, unfortunately, because many delegates are there. For the benefit of members, I'll be using the language in a combined manner. Coming to my session, I think I'm very fortunate. The ball was set rolling by Anand's session. What a proprietor cannot do and what an NBFC can do, that was amply made clear in the last session. So from there, I will pick the threads. Anyway, I picked many threads from Anand. I'll pick this also. NBFC versus unincorporated bodies. So why do you need an NBFC? We are living in a country, or now our country is progressing towards more compliances, more organized way. Today, when you see the statistics, a simple example of organization is even a small kirana store into GST net, income tax, these, that. We were listening to Chandrasekharan of Tata Sons chairman day before yesterday, Mr. Anand also was there. So there the issue came of carbon prints, and notice a new term has come, ESG, environment and social and governance. So listed companies, today about 100 listed companies are bound to report in their audit report their ESG compliances. And we were told that forthcoming public issues, whoever is good in ESGs will command a better issue prices in the coming days. Leave that apart. Chandrasekharan made one good point. He said, carbon footprints, the way India has announced in World Trade Organizations, if companies do not do that, the companies will be out of business. That's the word he used. Those companies who do not do that will be out of business, and Tata Group as a group has taken this as a responsibility. He gave many examples. So if I draw the same analogy here, if we are moving towards organized way of working, and if we don't get organized, probably the day is not far when we may also feel that we are out of business. We know the advantages of working in a small group as proprietorship partnerships, but today with other problems like you cannot borrow debts, there are certain restrictions on borrowing, so you can borrow only from a related person or so and so forth. And the greatest factor is, though the things are not very clear, but still when any case comes for usurious interest or police cases, NBFCs are looked with respect. And still many governments and even NBFC and RBI also are not clear whether an NBFC which is registered under RBI should take a local moneylender's license. We do not know clearly. Still it should be put to the test. But still we are taking a view as a financier. Whenever such situation arises, we say, I am governed by RBI, so I will not care, you go to hell. State government, we can say that. So that's the biggest advantage. Then if you want to really grow, then that is the only alternate. People who want to work with their own money, we are happy, I am doing it in a small way, it's fine. But if you want to grow, you cannot grow unless you become an NBFC. It's like if you want to have a family, you have to marry, you have to run a house. So similarly, if you want to grow, you have to come to an NBFC. I've got 2 learned speakers with me. So I will divide this in 2 parts. To start a company, how do you start a new NBFC? Is it better to start a new NBFC or take over an existing NBFC, get it transferred to your name? What are the implications involved? Is it easy to float a new company, or it's better to take an existing company? There were days when RBI was very reluctant to give new licenses. So we had no other choice but to take some existing company and do it. But nowadays, RBI has become flexible. Many licenses are issued, he will share with me. And the speaker here, Mr. Anil Doshi, is the person who has got my NBFC newly registered. He got a new NBFC license. So he is experienced well in that. So we'll take it that way. Creating a new company, taking over an existing company. And after you have formed a company, there are certain regulations which you have to comply with. What is the cost of those regulations? I'm in a small town. I don't have sufficient consultants. I don't have good company secretaries. I don't have good chartered accountants. These can be some ground realities. But still, that cannot be a ground to not to do certain things. So we'll try to deal as we take the session forward. So we'll take into these 2 sessions. And Mr. Deepak Mehta, who is already running an NBFC, he will share his experience of compliances. Today, I think we are regulated more than we should be regulated. Reserve Bank has no other work to, but every day brings some regulation on NBFC. The morning you rise up, you see some news about NBFCs. But all these things, as Mr. TTS always says, our resilience is there. We have withstood all these 40 years of storm, and still we are strong, we are growing, and we are existing. So we have existed, we are existing, we will exist. The economy cannot run without finance, and we are going to provide the finances. With these opening remarks, I will request Mr. Anil Doshi to first present his presentation, whatever he got. First we'll take Mr. Deepak Mehta, then we'll go to Anil Doshi. Please.
Respected President of FIPA, Shri Meghraji Lunawat, Secretary General, Shri Dineshji Kothari, Convention Chairman, Shri Rajesh Bhurat, Convention Secretary, Shri Devang Choradia, our moderator for this session, Shri Madanlal Sagundecha, and co-panelists, Shri Anilji Doshi, past presidents of FIPA, members of affiliate associations, and other guests. A very good morning, and it's a wonderful feeling to see you all in person. It's after a very long time that we've all got an opportunity to meet and interact. The joy of meeting and being present together is different. So we've now moved away from the virtual world back to the real world. So to take this forward, I thank you. I thank FIPA for inviting me to interact with all of you. I have been asked to cover the opportunities, challenges, solutions, and process of conversion of unincorporated bodies to incorporated bodies. That is, what are the benefits, problems, solutions, and the process for converting from proprietorship and partnership to NBFC. Before I start, I would also wish to inform all of you that our expert on this subject, Shri T.R. Achaji, our past president of FIPA, was to deliver this talk, but due to bereavement of his father, he has not been able to be among us today. I have made an attempt to cover the maximum points on this subject, but I am not an expert like him. But yet, I would try to do my best, and kindly bear with me if in case I miss out something or some of the points. To start, there are a lot of asset financiers who are yet doing business in the unincorporated module of proprietorship and partnership. But there are limitations, as as our moderator had explained, and even the previous session, Mr. Anand, Mr. V.G.K. Prasad, and Deepak had presented that there are various challenges and how NBFC module how the NBFC module has helped them grow. So we will be looking into each of the points and trying to let us try to understand which is better and how NBFCs help in growth. A lot of us face various challenges, the ones who are doing business in the unincorporated module. The challenges that you face day in and day out is the Money Lenders Act, Usurious Interest Act, harassment of police authorities, and questions being raised in courts about the validity of such entities in law, and a very pertinent question which is being raised for ages is that under which law or under which authority these bodies are registered and who is monitoring them. The very purpose of doing asset finance business is to earn money, make profits, grow, support the ones who need financial assistance and for the financial assistance for their livelihood, and continue this cycle. The understanding among authorities about our business is so bad that I would wish to share a couple of incidents in the past. We had gone to invite the governor of Tamil Nadu for South India Hire Purchase Association's Golden Jubilee celebrations. To our utter shock, the first point which the governor had raised, that all of you are money lenders and you take a pound of flesh. It was a very tough scenario for us to explain to him that no, we are not such. Though there are unincorporated bodies, we also have incorporated bodies who are monitored by RBI, and we are the people who are delivering the last mile credit and giving the society funds to the unbankable people and the people whom banks do not lend or institutions do not lend or do not have a credit history. It was a tough time to explain to him and convince him that all of us are doing genuine business, but as I had said earlier, it raises a question. Similarly, at this same venue, about 2 years back, FIPA had sponsored a symposium for the Supreme Court, High Court judges and advocates. The Supreme Court judges and few of the High Court judges also felt that all of you are money lenders and you're doing you're not doing genuine business. But then again, we had cleared the air, and for the benefit of our members, we had explained in detail that no, NBFCs and non-NBFCs are doing a wonderful service to the society other than earning their profits. So I'm just trying to connect it over here that non-NBFCs have too many questions to be answered, and as an NBFC, the questions are limited since we are monitored and regulated by the Reserve Bank of India. For us to grow in asset finance business, we need to increase our business. We need to raise funds constantly. Money is our raw material, money is our finished product. So ultimately, we can grow only by raising money, churning it, earning our profits, redeploying, and keep doing this. Now, what are the options to raise money? As already discussed and we've heard, for NBFCs, equity and debt, both are the options. But what is the options for unregistered bodies or the proprietorship and partnership firms? As one of our young questionnaire and the attendant in the convention had asked, RBI has also been releasing advertisements of late regularly in various print media and social media, stating that general public should not borrow or do business with non-NBFC regulated or registered bodies, which again is an impediment for non-NBFC entities. For non-NBFC entities to raise funds, the option is by infusing capital, but there is a limitation to capital infusion. Next, borrowing from banks. Again, as a non-NBFC, it is very difficult to get funds and at times next to impossible. Banks demand at least 3x or 4x of collateral, and various other norms are prescribed where you need to have personal guarantees, though you give it in a company, but it is diluted at many places. But for individuals, that is the proprietorship and partnership firms, it's very difficult. The next option is borrowing from friends and relatives. That too has a limitation, and as unincorporated bodies, here they would have to do in accordance with the section 45S of RBI Act. The other method of raising funds is franchisee module. In this model, there is a guideline on outsourcing which restricts funding from NBFCs to non-NBFCs. In fact, RBI has been orally instructing deposit-taking NBFCs not to lend to non-NBFCs who are not registered under State Act, which again is a big challenge that every state has a different Moneylenders Act. As NBFCs, there are various and easier options to raise funds, which was also explained by in the previous session. The first option available would be raise funds from banks, which would be initially available against collaterals and high rate of interest. But as you establish your credentials, the ratio of collateral and rate of interest would start coming down. Small NBFCs have an option to raise funds from bigger NBFCs against their receivables, and this is constantly available on performance of the portfolio, where even a little bigger NBFC looks up to the smaller NBFC, and they are there to hold the finger, and slowly you can raise yourself, raise the bar and keep growing. I even am aware that Mr. Prasad's company, they also do funding to NBFCs. In franchisee business, the endorsements are of bigger NBFCs, but in the receivable funding, the endorsements are similar. Endorsements are of smaller NBFCs, giving you the freedom of working and issuing settlements and NOCs. NBFCs also have an option to raise funds through debentures, but this involves some statutory work and go through the process of setting up trusteeship, etc. On attaining size, NBFCs have an option to raise funds from SIDBI and Mudra also. Co-lending is an option which is opening up. In this model, smaller NBFCs would fund certain percentage and banks would lend the remaining portion. Profits are also shared in a ratio, and portfolio shall be managed by the NBFC only. Here, there are various models which are being explored and tried, like the first loss and loss limitation modules. NBFCs can also raise private equity and command a premium based on the workings and profitability, giving value and wealth creation option to promoters. Commercial paper and securitization, again was spoken in the previous session also, is an available module for bigger NBFCs. NBFCs can borrow up to 6 times approximately of their net owned funds, that is the capital of the company and accumulated profits. Next advantage of an NBFC is that it shields you from the Moneylenders Act and Usurious Interest Act. As there are different acts in different states for money lenders across our country, though the matter has been challenged in the Supreme Court that Moneylenders Act would apply even to NBFCs, it is not yet cleared nor has the Supreme Court given its verdict. So as of today, NBFCs do not come under Money Lenders Act. Another advantage of an NBFC is relaxation of Section 269 ST. As per Section 269 ST, friends, all of you would be aware, if the agreement value is more than 2 lakhs, you cannot collect payments of your installments or settlements in cash. Even a single rupee cannot be collected in cash. If you do so, penalty of equal amount can be levied. But if you are an NBFC, then each installment or settlement amount up to rupees 2 lakhs can be collected in cash. Next advantage is, if you are an NBFC, you can verify the credit history of the proposed borrower. The data given gives the credit score, default levels, whether the proposed borrower is a serial defaulter, etc. before you lend. It gives an understanding of what type of customer one is going to lend and helps you decide the risk you wish to take. NBFCs need to necessarily file customer repayment and default data. In other words, the credit history of customers with all credit information bureaus like CIBIL. If your customer is not paying you in time and if default is reported, then his credit score would be affected. As most of the bigger institutions lend by checking the CIBIL score of a lot of customers would get spoiled if they do not pay up on time. And just to maintain their score, a lot of customers come up and pay you on time. This also acts as an impediment. At times, when you report your default data to CIBIL and all other credit information bureaus, when the customer grows, or if he needs to get better credit facilities, or he needs some other benefits, or even for any other business which the borrower is in, he would have to clear his credit score, and only then he is given the business options. There was a case where we have faced that somebody had gone for a Maruti dealership. He was a defaulter with us about 10 years back, and Maruti did a CIBIL score for him, and they refused giving him a dealership. He came back, he settled us with interest, and then he got the dealership. So that again is an impediment, and which could be used effectively as an NBFC. Large NBFCs with bigger portfolios have the benefit of SARFAESI Act, which helps speedy recovery process of defaults. Next advantage is reduced income tax for NBFCs as they come under the company format. Income tax rate for individuals in the highest slab is 30% plus of surcharge and cess, which as a net rate could go as high as 42.7%. But the highest rate for a company is 30% plus surcharge and cess, and if your turnover is below 400 crores, then tax is even lower at 22%. Hence, if the income is higher from business of financing, then one can save income tax also if you are an NBFC. If you are an NBFC, you would calculate and pay your own GST, only if it is applicable to you. But if you are a non-NBFC, then GST is paid by your payer on reverse charge basis, although it may not be payable by you in actual, which at times may increase the cost for non-NBFCs. For NBFCs, RBI has spelled out the type of manpower and training for repossessing agents who are authorized for this job, but that kind of shield is not available for non-NBFCs. Now I would like to dwell upon the challenges of being an NBFC and solutions thereof. NBFCs need to calculate income on the basis of mercantile basis, but non-NBFCs can calculate their income on cash basis. This results in payment of income tax by NBFCs earlier than what non-NBFCs are paying. Yes, NBFCs are allowed to claim a provision for bad and doubtful debts up to 5% of the total income under Section 36(1)(8)(a). NBFC can also claim bad debts and reduce their income tax outflow. NBFCs need to mandatorily follow Fair Business Practices Code, which would need to do some additional work to be carried out, and such additional work like issuance of agreement in vernacular language, etc. NBFCs need to follow all guidelines and regulations of RBI and file various returns periodically. This would be explained by my co-panelist, Mr. Anil Doshi, in detail. All this involves some additional investment in the form of professional costs, which is comparatively insignificant to the advantages in the ease of doing business as NBFC. Now, we would discuss the process of forming an NBFC. The process is very lengthy and detailed one. Several documents need to be filed to suffice various requirements for the scrutiny of RBI as per their norms and process. The planning and homework before filing application is very important. One should take the help of a professional, as all the documents should be vetted, forms shall be filled in all aspects from RBI's point of view before filing. The major requirements for formation of NBFCs are: 1. Experience in banking and financial services. RBI looks at least one director with banking or financial services experience. He should have experience of credit, have money lending, or have a money lending license or kind of business in the money lending. May also be considered by RBI, as it was shared by Mr. T.R. Achaji a few days earlier. This needs to be critically examined, and each case needs to be looked into in a different way. Second, sufficient net worth and source of capital. Your net worth and source of capital for NBFC should be clear. It should not be from borrowed money. Capital requirements and enhancement from 2 crores to 10 crores of NOF should also be kept in mind, and net worth should be supported by proper evidence. Here, immovable properties are also considered in your net worth at the market value. Fair market value is considered by RBI. Non-default credit history is the next point. The credit history of all the promoters should be clean and should be of a non-defaulter. Any kind of issue in your CIBIL score, or any legal entanglement, or any revenue issues, or any cases pending, RBI is very hesitant and they reject the license application. Non-violation of Section 45S. RBI views 45S very seriously. Any violations of 45S would not be considered for giving the NBFC license. Definition of a relative in Section 45S should be fully understood. For example, father-in-law is not a relative under Section 45S of the RBI Act. The next is no criminal cases or violation of major laws. There should not be any criminal cases against any director or shareholder, and the director or shareholder should not have violated any revenue regulations. Hence, the decision who would be a director or who should be a shareholder should also be taken very carefully. You would need to have a bank fixed deposit of rupees 2 crores. From the date of application to the date of license is received, the tenure could be for 4 to 6 months. This may be increased to 10 crores with effect from 1st October 2022. The process of application varies in each case based on their credentials. From what I have heard from a few consultants, Achaji and many other peers of the industry, I am trying to list out a few reasons for which registration of NBFCs have been rejected. Lack of experience is one of the cause. Violation of Section 45S of RBI Act. Net worth not being there and insufficient for scaling up of business. Memorandum and articles of association were not drafted keeping in mind with the RBI's guidelines. Irrelevant papers being attached, which creates irritation of RBI officials as they need to review and scrutinize documents within a given time period, and it's a laborious job for them, so they try to push the buck back to you. If the documents are irrelevant, they do not want to go into it and try to segregate. If properties are not properly valued, wrong formats are attached. Next, shareholding of directors with experience is not provided. People tend to bring in a director with experience, but he is not given any shareholding, or they don't show him to be a shareholder, then the application is being rejected. Company is not incorporated with business code other than 65, code 65. Fair practice code resolution is not drafted properly. Format of bank letters are not proper. Online and offline forms are not filled properly. Net worth certificate is not supported by evidence. Name and address mismatch in Aadhaar, PIN, DIN and PAN, which is a very common problem among a lot of people. You would have an initial in your name in your Aadhaar or in your PAN, but your name in the DIN and your PAN would be separate. So that again is a problem where applications get rejected. Various required declarations are not filed. Website of the company should be formed before filing an application with RBI. But many people do a mistake. They put in unnecessary details and also share a detail in it that they've been doing finance business, they've been doing so many things, which is again taken into a negative aspect, and RBI rejects the application. Group concern details and activities of NBFC are shared without obtaining NBFC registration on the website. I would like to also add that once an application is rejected by RBI, all the applicant directors may not be able to get a registration for their lifetime. RBI has a negative list where they maintain that list and it is shared across the country, all over India. As I sum up the discussion, the advantages of being NBFCs and being an NBFC outweighs a non-NBFC business module, while we compare the risks, challenges, solutions and advantages. NBFC format again gives you and your business a perpetuity for the business which you have built with all your passion and hard work. NBFCs give you more room to bring in professional management. You can attract the best of the talent and bring in the best of the employees as an NBFC. On achieving size and efficiency in working, NBFCs can also get converted into small finance banks, which we have seen a few of our peers like Equitas, etc., have got converted to small finance banks. Other benefits as an NBFC is to increase the valuation of the business, and you could sell the business in part or by equity dilution in full for higher valuation, and you can make your money. The plan of selling business in part or full is possible again in both the modules. As a non-NBFC, you can sell it in full, but as an NBFC, you can have part dilution or you can sell the business in full. Business sale is more reliable and easier if you have an NBFC module because the due diligence and understanding is easier. It is more transparent. As an NBFC, even a small NBFC gets a level playing field with the bigger NBFCs, and there is a wide scope for growth. Earlier, friends, I would like to share that earlier in asset financing business, the earnings were calculated on IRR on every contract and rupee invested, and major portion of the portfolio would earn the contracted IRR or more. We would probably, when we were investing at 24% IRR, or earlier days even 30% IRR, or 21% IRR, most of the contracts would earn us that IRR, or even additional earnings would be there because of some default or here and there. And the assets which we were funding were not depreciating this fast. So even by reposition, you were able to get your money invested and earn a good IRR. But now as the business has gone through various cycles of churning, one cannot earn the contracted IRR and profit in all contracts. This is an era where it is an overall profit earned that is looked into. So we would all have, or you would have to change your mindset, and to be a relevant player in the volume game, you would have to be willing to take calculated risks and be content with the overall profit earned in money terms on leverage portfolio than IRR terms. So there is a big shift from what was being done earlier and what is being done today. Many non-NBFC businessmen may not be able to form an NBFC for various reasons. And here is the time for our industry and FIPA to take an active role of merging the synergies of unincorporated bodies and take them on board with NBFCs which are wanting to expand. While non-NBFCs can bring in value addition to business, they have a niche area of operations, they have a customer base, and also could be contributing to robust management. So, with this, I hope I have explained the benefits of operating as an NBFC and the formation process and the rejections which RBI does. So I request all our non-NBFC members to explore the possibility of moving to the NBFC module. I remember what Mr. Prasad had told us a few days back. What he was told by Mr. Raman from Sundaram Finance. He was told that convert to an NBFC. If you have a problem, if you don't succeed and if you fail, come back to me, I will show you the path. And he had promised us, Mr. Prasad, in a talk a few days back, that convert yourself to NBFCs. If you have a problem and you face any issues, I am there to support you. You can come back to me. So here, all our industry peers are there to help us. Please look into it. Try to take advantage of this scenario as RBI is giving NBFC licenses at a good speed if all documents are submitted in time and quickly. So please think about it, ponder over it, and move ahead. Thank you.
So Mr. Prasad is here. I'll request him to stand up for a moment. Any problem, come to Prasad ji. We thank him for being here within a fortnight. Before a fortnight, he was here. His daughter also was with him. She explained beautifully how technology can be leveraged. So I thank Deepak Mehta. He has given a very loud and clear message. Apart from this, one important thing which I forgot to mention both of us is, there are certain, earlier we had problem with central government itself when they were bringing the new Motor Vehicles Act. In that act, they were thinking of removing us from even making endorsements in our favor. So Mr. Acha, me, Dineshji, Deepak sir, 2-3 times we went to Delhi. Many friends sitting here were with us. We had 3 meetings with Gadkari ji, then we went to Transport Minister. By very great difficulty, we were able to take out the word NBFC from there. Thank God the act is still hanging. But I was told now by Acha ji that Chhattisgarh is a state where unincorporated bodies are not permitted to make HP endorsements. अगर आप NBFC नहीं हो, तो छत्तीसगढ़ में आपका एंडोर्समेंट नहीं होता है. राजस्थान गवर्नमेंट ने यही ट्राई की थी. Immediately they went to the court. I think they got the stay, so they escaped. These situations are very tricky and dicey, and it's always hanging. To get out of this is better. जब करना ही है तो उस रूप में करो जो रूप में आपको accept होगा. One thing is we have to decide whether we want to be in this business or not. If we have to be in this business, then I think the day is not far. At least all of you from this hall, when you get out in the evening, make one determination in your mind that we grow or not grow, we become 100 crores or 500 crores. Even to work at 20-30 crores comfortably in future, the only existence possible entity is NBFC. That message even I want to give. We will take many things during the course of our deliberations here. उसके काफ़ी तकलीफें दूसरी भी है, but in spite of all those things, एक परिवार चलाना है, एक समाज में रहना तो मुश्किल तो ही है, लेकिन समाज में भी रहना है, परिवार को भी चलाना. That is the analogy I can draw. And so Mr. Deepak has brought you to the level of company बना लेते हैं, and he has given a very clear message that no, RBI is very flexible. RBI is liberally issuing licenses. So this is an opportunity we can seize. But having formed a company, what are the difficulties we are facing in compliances? That Mr. Anil Doshi is a learned company secretary and a lawyer. He will explain, then we'll take the session for practical discussions. Doshi sir cover कर लिया बात. In compliance, even that 2 crores to 10 crores NOF, RBI has increased our NOF to 10 crores. For existing companies, they are given some time frame within which we can reach that. But for a new company to apply for a license, today it's 2 crores. From October onwards, even if you apply for a new company, you'll have to make 10 crores. But I think he had a different opinion, Mr. Anil Doshi, so I want to hear him also. His words are very comforting, but to what extent he can convince us that we are out of it, let us see. Mr. Anil Doshi, I present.
Well, good morning, everyone. We thank you for giving us an opportunity to speak here today. I may or may not be capable enough to address such an experienced industrial, people who have been into this field since decades. Probably my experience itself is beyond that. So, considering whatever Mr. Deepak ji has enlightened at this minute, I have a very few points left to say here or guide or throw some light to people here, which would help them to, run the company in an efficient way without seeing much of the problems from the RBI's end. Before I take it forward with what are the proposed amendments which is going to take forward from, I think, 1st of October 2022. There is something called a scale-based regulations, wherein the most important thing all over, the legislations the country is looking for is scale-based. We would not be forced, or burdened with enormous compliances till the time your exposure to the public money or outsiders are limited. So, coming directly to the point, there is something called a scale-based regulations which has come during October 2021 by RBI, and giving a guidance of what kind of categories of NBFCs would be there, what are the additional restrictions which are being levied. So basically, there are three kinds of NBFCs which would be categorized, one or rather four categories: a base layer, a middle layer, a upper layer, and a top layer. So giving a crisp of how these things work, any entity with an asset size of 1,000 crore or less would probably be categorized into base layer. And there are certain relaxations by RBI as the detailed compliances need not be looked into. However, for an entity which has asset size of more than 1,000 crore would either be categorized into a middle layer or an upper layer, where RBI's interventions, the filings, the reportings and all would be higher than a regular NBFC companies. Okay. For time being, as per the notification, RBI has explicitly stated that the top layer would be kept empty and they would not be categorizing entities unless it is found to be systematically risky. What would be the formula to derive and categorize a company as systematically risky would be known only when we move forward. Few of the major restrictions, or rather, as Mr. Madan Lalji has said, there is a small difference of opinion, what I hold right now with net owned fund. At this minute, whenever an application for NBFC is being filed, the net owned fund, the capital criteria is supposed to be kept at 2 crore by way of an FD until the license are permitted. However, the new requirement of 10 crore of net worth seems to be applicable only for an ICC, microfinance institution or factors. So basically, whenever an application is being applied on or after 22nd of October under these category of companies, would be required to deposit a sum of 10 crore by way of an FD, and then the license could probably become permitted if the documents are found to be in order. There is also a provision given under the same regulation stating that NBFCs falling under P2P, accounts aggregator and regular NBFC without any deposit taking activities would continue to be at 2 crore net worth. Probably going forward, we would be having a little more clarity on the same. We are of the opinion that NBFC with a smaller scale of business, or what they said as a base layer NBFC, would continue to be at 2 crore. We will just wait probably for the RBI's clarification further on this. There are various reservations or restrictions. I would first prefer to cover on the base layer where majority of us fall, until it's again like Sriram, Sundaram, TVS, and so. So, under the scale-based regulations, there are 2-3 criteria which needs to be kept in mind when it comes to operations. The Reserve Bank of India has clearly cited any matters relating to related parties has to be elaborated in detail with a lot of disclosures. This is one of the area to be focused on, where any transactions are amongst the directors or relative of directors or any entity in which the directors are connected. It has to be a well-planned transaction and could not happen just because it is an arm's length basis. So any transaction proposed would probably require a prior consultation with your accountant, company secretaries, or advocate, and taking that forward. There have been certain additional disclosure requirements with regard to the funding, the charges, and other things, which is quite procedural, considering the lack of time. I would prefer not to comment on that at this minute. For the middle layer and upper layer companies, there have been a mandatory requirement of capital adequacy ratio in order to commensurate with the risk attached to the business. It would be probably a formula driven, where the percentage of NPA, the capital, and your debt would be synchronized, and an effective formula would probably be formulated and shooted by RBI. There are various notifications awaited for many of these activities from RBI, which has been explicitly stated. Proper clarity would definitely reach us on or before October, when it is implemented in full-fledged, is what we believe at this minute. One of the very essential point till now, which was being practiced but was not under the act or in black and white, is an experience of the board. At this minute, while preparing an application, filing it before RBI for obtaining license, it definitely asks for what is the board's experience, who is going to manage, what is the protocol, various things. But this is the first time, we believe, where RBI has explicitly brought into recognition under its rules, stating that for a middle layer or an upper layer, there has to be a board member with an experience under the finance industry or should be an ex-banker. This is one of the very essential criteria which would be brought into force from October 2022. It also states that during the peak time, when the NBFC touches the upper layer limit, it would not be recategorized into a middle layer or base layer, even though it does not touches the criteria given there. And this would continue for a period of 5 years until RBI is of the opinion that it should be. There are lots of challenges as whether RBI would be taking it voluntarily or based upon an application to reduce the regulatory requirements is something we need to wait for clarity and the subsequent rules pertaining to the same. This was more specifically relating to the scale-based regulations, which is more relating to the quantum of business we are into, the exposure of public money or public funds. Let me also highlight a small point on public funds. It is not just a borrowing from public. A banker's loan also is categorized as a public funds. To my limited experience, we have observed as explicit reservation on public funds when it comes to core investment companies. However, does it really matter for an NBFC is something we need to go forward. But the public fund criteria does not involve the public at large, but even exposure from the bankers would be categorized as a public fund. Various extra regulations and the compliances might be applicable. if we have a banking exposures. Well, this is in brief about the scale-based regulations. There is another challenges or probably hurdle which has to be properly looked into is something relating to the auditors. As per the latest norms, an auditor cannot continue to be the auditor until for a maximum period of 3 years. It means all the industrialists sitting here into the NBFC market would have to frequently change their auditors. The regulation is so beautifully drafted. It further goes in line with the scale-based regulation, wherein, to our surprise, it has been stated that the auditor's appointment henceforth would be by way of a prior approval, wherein the NBFC companies would be required to file an application of a minimum 2 audit firms. It is not even the individuals who can carry on audit henceforth. It is audit firms who would be taking up. The names of the audit firms has to be given in a preference wise. They need a requisite number of partners. The partners should be full-time. Their details relating to other businesses, where are they working on a part-time, what are the other entities they are engaged into, whether the qualified professional holds a CISA qualification or a ISA qualification. There are lots and lots of conditions which would probably pose a threat on the industry to find a applicable auditor which could take our audit. It should give a comfort to the organization, bring value, and guide it in a proper way. If we are a company wherein our auditors have been associated with us since a very long time, this is the time we need to change it. How there are many things on practicality, as you know, through an understanding, using their associates, many things have been taken up, but all points as well have been curtailed to a great extent. So people sitting here and who have an association with the statutory auditors for a period of more than 3 years are supposed to look into this aspect proactively so that we don't default on any of these matters. I was also informed in brief, of course, everyone here would be knowing it, but for the sake of clarity, there are certain activities what I am requested to be thrown on relating to the takeover, the change in the management and other aspects. So basically, RBI does not allow us to transfer the shares even though we are a private limited company, free to transfer. As per the RBI Act 1934, it is stated that any change in the shareholding pattern beyond 26% until it is by way of a rights issue, or there is one more reservation, capital reduction or so, it requires a prior approval from RBI. Likewise, any change in the directorship beyond a 33% would also require an prior approval from RBI, and then that could probably be implemented. The process of approval generally takes around 2 to 4 months, provided things are in order. The same conditions like your CIBIL score, your experience, your net worth, how are you going to contribute to the organization, and the manner of taking things forward. During filing our applications, there have been cases where RBI have asked for the future projections, and we are also supposed to substantiate as how are we going to meet the projections given here. It cannot be superfluous, but has to be backed with certain evidences as what is the reason for giving those numbers there. Apart from that, the last point probably during this session would be on XBRL filings. It's nothing major, but the ground reality shows a lot of working from the professionals end or the accounting team who is taking care of these things. There's something called as XBRL filing, which is Extensive Business Reporting Language, wherein RBI mandates us to give a hell lot of disclosures. Bifurcations are made in thousands and thousands, and it becomes really cumbersome for NBFC many a times if their business is spread across, different classes of assets. And so the XBRL filings are either on monthly basis, quarterly basis, or annually basis. It all depends upon the category of business we are engaged into. Asset size of more than 1,000 crore would require monthly filing of certain XBRL forms validated, and as per our experience, where there were a deviation in the XBRL filing pertaining to the percentage what they have pre-prepared, the filings which were made were sent us back to be rectified, and then that was being approved. So I would like to rest my words here until there are some queries. Considering the scale-based regulations and the auditor-related matters, we believe it's a high time for NBFCs to look into these aspects, pre-plan, and ensure that there are no violations or there's no last-minute rush towards the same. So I would like to rest my words here, thanking everyone here to giving me an opportunity to present. Thank you.
दीपक सर said one word when he was addressing कि जब गवर्नर को बुलाने गए तो गवर्नर ने बोला तुम लोग सब ब्लड सकर्स हो क्या ना करके. But friends, believe me, I am very proud that we are in this business. No big industrial house in India today is without an NBFC. Take Tata's, Birla's, anybody. All will agree, all have got an NBFC in their stable of their companies. Every big industrial house wants to come in this finance business. Consumer finance is a very big basket where the entire NBFC industry को भी इतना पैसा नहीं लगा सकते हैं. Take for example a small example of Bajaj Finance. Or I was told they are coming out with a proposal where they are going to give loans up to 15,000 without any collateral, just on personal score. Fintech companies who have come in large numbers today. So every fintech company doesn't have its own NBFC captively. So they all depend on you. If you have got money to lend, you can tie up with a fintech company. Various new types of products are coming. Out of my experience in angel investment, I'll tell you, fintech companies have come with NBF companies. They are financing the school fees and college fees for the students. Take for example a school of 3,000 students. They are paying the fees in advance. They have got collaboration with the school. If the parent doesn't pay the fees, the student is not permitted to sit in the examination. Money is secured. The boy will not leave the school. Parents cannot afford to take the boy or the girl or the student out. Money is safe. They are giving some percentage to the school for managing that. So these types of products where you don't have to even think of a single paisa bad debt because these monies will never go waste. MFIs, it's a different ball game, but they are also able to recover from blue collar jobs. So these are the areas. But I was told recently by a very renowned person and who is a person whose word can be taken because he's on the board of RBI. He said that in the last board meetings, Nirmala Sitharaman was present in the board meeting, and she gave a clear message to the RBI saying that whoever is not taking public deposits, don't regulate them highly. Leave them, let them work. They have got their money, they are working. Where are you bothered? And India is a country where banks cannot fulfill the needs. NBFCs have to exist. If this message is something which can be taken seriously, I think the day is not far when we will be said that below 1,000 crores companies, no regulations, just file 2 or 3 returns, matter ends. But once you become an NBFC, be prepared. Every second there will be a mail in your mailbox asking something. So coming to the question answer and practical session, I'll start with Anil sir, your experience. Is it good to take over a company or to form a new company in today's scenario because RBI is very flexible in giving licenses? So comparatively what is easy? Because again, when you go for a new license, as you said, profile of directors, projections, information to be given. Of course, that also is to be given in a transfer of management also. What is the relative advantage, disadvantage? Can you throw some light? Because taking a company, again, you have to pay 20-30 lakhs to the seller. Then again, 10-15 lakhs for your transfer and all. cost forget, but if my taking over is easier, then I will prefer that. Otherwise, I'll go on a clean slate, which is a better option in this time.
This answer would be backed with a lot of disclaimer. However, keeping it short, coming directly to the point, a takeover of NBFC is really feasible immaterial of whatever is the premium attached to it, provided all the compliances relating to the past are up to date and have been done within the time limits prescribed under the Act. Very recently, we have come across one particular case wherein an application has been filed before the RBI for takeover, but it was unfortunate that the company has missed out certain returns, like your XBRL returns or the Cosmos filing, what we call it as, due to which the profile of the directors were quite strong, belonging to ultra-high net worth individuals, a good profile with a good experience, but unfortunately their application was denied because the company's compliances were not in order. Secondly, if there are any kind of litigation which comes into picture, immaterial of whether we are responsible or not, the litigation would be first filed against the current directors. We need to break our head, go before the courts, justify that it was not during my tenure and come out due to the limitations. But it creates a pain. So a general advice here would be, until the company is known to us, we have done a thorough due diligence to find out that to the extent we can, things are in order, in compliances. It is never suggested to go for a takeover. However, the pain here when it comes to incorporating an NBFC is a waiting period of around 6 months approximately, blocking of a substantial fund into the bank account by way of an FD, and once again in a threat of application being rejected because RBI has the complete power to deny. In one of my cases known to me, an application was rejected though there were no bank borrowings, or rather the directors have plenty of capital in substantiated with auditor certificates or so. The RBI rejected the application, stating that the RBI is not convinced of protection of the public funds. So we were really surprised to note that when there is no outside borrowings involved in the same, how can RBI be taking this as a call? But however, the client decided to make use of the company in other manner. So the particular application was dropped. It was a fit and proper ground to go for an appeal and take it forward. But we have to keep in mind, if we feel that the promoter's background, the experience are not sufficient enough to justify RBI, a takeover is an opt thing because an entity is already registered. Definitely when the agreements are being drafted, in practice it is in a staggered way. As and when the stage is complete, the monies are being released. So it is one call. It has both the pros and cons attached to it. We have to take it forward. Until it's a known NBFC, trustworthy people, takeover would not be suggested, is what we suggest to our clients.
So nowadays, because RBI is very flexible, it's better that you apply for a new license and get it, rather than, because one is you have to see the due diligence, the old company is what it has gone through. And not to name, but we are talking friendly way. So most of the companies available are from Calcutta. So you have to take High Court permission to change the corporate office, registered office, all these things are involved. It was a compulsion about 3-4 years back when RBI was not giving license at all. But now RBI is giving. अभी दो सिचुएशन अच्छे हैं. RBI दिल खोल के लाइसेंस दे रही है, और with my experience of last 10 years with investment bankers, 10 साल के पहले कोई PE fund या VC fund were not looking with respect on NBFCs. But today if you talk to any investment banker, he says my first priority is NBFC. तो आपको private equity इतनी मिलने लगी है आजकल कि they look at you with respect. So these are the two things जो हमें prompt करती है कि why not get into that mainstream where we can work like this. Then the next difficulty is NPA norms. But I think NPA you have no escape, or as rightly pointed out by Anilji, if you have even a single piece of bank loan, it's a public money. You don't take deposits, you don't take any other debt. But if I have got a bank loan, whatever amount, it's a public fund, so you have to submit to NPA. Luckily, RBI has given us time till October for 180 days. But I'm sure the way the other person told me about the non-regulations or diluted regulations, this 180 days is going to stay for us, for asset-based finance on loans which are hypothecations. So we can say as relief, it's going to come. If at all it's not good, and I think the government in its wisdom should do that. India is a country where you cannot expect 90 days for commercial loans, MSE loans, SME loans, or truck operators, commercial vehicles. I think this will get into the heads of the government and we may expect some relief. Coming to regulatory side, I would like to again, they will supplement me. इतना कोई ज़्यादा थोड़ा पैसा उन्होंने पढ़ना मुड़िया तो compliance ऐसा कुछ नहीं है. Very simple compliances for type 2 non-deposit taking companies. There are periodical returns which have to file. और उसको and मेरे हिसाब से for such small companies, the additional cost of compliances, all these things will not go beyond 2 lakhs per annum. Anilji has to correct me on this.
Well, the cost of compliance is something, it depends upon professional to professionals, their commitment, the comfort, what they are giving to, in normal course, the scale of operations when the NBFC has higher, they do have their in-house, either qualified, semi-qualified chartered accountant to take care of regular compliances or so. And if there is a proper support from the team in a pre-designed manner, your cost of compliances for this RBI regulatory aspect should not be crossing 1.5 or 2 lakhs. Even that is on many times on the upper side. There have been cases where the client takes care of all the compliances in-house, and even after secretarial audit, we have been charging them a sum of just 1.25 lakhs or so. It depends upon the activity and the efforts, the total quantum of work involved, and accordingly it can be taken forward.
No. I think one very important aspect which has come up is in a regulated NBFC situation, how do you deal with cost of compliance? One solution which is going to emerge as we go along is, see, how did IT industry look at shared services? A lot of companies use shared services for their information technology. Today for compliance, you'll have a system by which there'll be a few people sitting in one roof offering compliance services for the entire 12,000 NBFCs, whatever I'm just saying. Because you can reap the economies of large-scale operation. Each company need not employ somebody for compliance. There will be a roof on top of the compliance umbrella where they will do the compliance for the entire NBFC population for a particular fee, which will be much lower than if you do it on a case-by-case basis.
Thank you, Anand. And I would like to understand the benefit of these NBFCs who only can be the members of credit information companies like CIBIL, CRIF, whatever it is. क्रेडिट रेटिंग कस्टमर का जो है वो अपने लोन देने के लिए तो अच्छा है कि भी उसके बेसिस पे अपन लोन देते हैं, वी आर एबल टू असेस हिज पोटेंशियल और हिज financial strength. But the second fear which the customer runs is, any customer has got a minimum of consumer loan for a fridge or TV something. He would have taken a small cash credit loan from a bank. So no customer wants to spoil his credit score. So that is an arm twisting available to an NBFC which is not available to other unincorporated bodies. Of course, we have been fighting with Reserve Bank and credit information companies also for this. But we don't know what's the reason. RBI doesn't want. Mr. Deepak will supplement me. So we are not able to understand the mind of RBI, why they don't want unincorporated bodies to submit their credit data. And the advantages, and as he rightly mentioned, one advantage, his customer could not go for a dealership of Maruti because his loan was not cleared. So I have seen after getting into this NBFC with my own customers, many customers come running to us. Sir, I want to pay 2 installments. You take out the score. Boss, I can do only in the first week of the next month. Immediately we give a letter saying that he has paid these installments. As on date, that is 0. So these are the situations which is prompting a customer to maintain his credit score. That is the advantage. I will ask Mr. Deepak Mehta to supplement on this.
Thank you, Madan Lal sir. One of your question is why non-NBFCs are not permitted to share data on the credit bureaus. The biggest problem is RBI, when we met them in person, they felt that non-NBFCs are not transparent and the data is not reliable. They do not undergo statutory audits, which was again the case for 269 ST. Madan Lal Shah, Achaji and myself had gone to Delhi. We had met the commissioner where he said that NBFCs are under audit. They've got statutory audits, but non-NBFCs do not undergo statutory audits. Where do you report? Where is your data? And they are not transparent. So he was not willing to take up. In fact, we were able to convince him, and he was going to clear the circular that even non-NBFCs will get advantage of what is given to NBFCs under 269 ST. Because of this one reason, non-transparency, it was retained. Similarly, the challenges which NBFCs are facing in filing their returns to these credit bureaus is everybody has got a different format, which is matter of time, where RBI wants us to give our data to all these credit bureaus, but all of them have got a different way of getting data and uploading in their system. So that is an added load, which we have been representing to RBI to bring it on a scale where one data can be uploaded for all the credit bureaus.
We have one question on Zoom that I'll just put up, sir, before you end. It's a specific question to Anilji asking the time period of empanelment of auditor is 3 years, as you mentioned. Is it for an external or internal auditor is the question. If you can just...
To the extent I understand, it is right now only for the statutory audit and not for the internal audit.
Okay.
However, there are certain cooling period like 6 years non-association of the same auditor or their partners with the same NBFC, and there have been a precondition that in case a statutory audit is proposed to be given to an auditor, he should not be serving the NBFC for those categories which is mentioned under section 144 of Companies Act, like your bookkeeping and consultation, the GST compliances or so. They have levied a cooling period for the same as well. For a period of 1 year, they cannot get the statutory audit in those cases. I hope that addresses the matter.
In continuation to what Mr. Anil said, even if an auditor by mistake has done some calculation mistakes or anything, he will not be eligible to be appointed by any other NBFC. That is very clear from our side.
Rather, one of the another challenges which has been recently noted was a single auditor or an auditor firm, what we call it as, would not be allowed to take more than 8 audits for NBFCs, which means there is a possibility that the experienced auditors would focus on the large companies available in their portfolio than to looking for a regular or a lower scale business NBFCs. So the cap on number of audits from the auditor's part is restricted to 8 NBFC. This also goes for the public sector banks and UCB kind of entities. But an auditor firm can take up only up to 8 NBFCs audits as per the prevailing rule. And I also believe that this condition is applicable for the financial year 2021-22. And there has been a citation on this particular matter stating that appointment of auditors and other thing has to be completed on or before June of this year. I'm not very clear about this aspect since it is more of procedural. My reservation here was just to ensure light is thrown on the regulatory front. So even that part needs to be focused on. Okay.
Yeah, one more aspect which we should all be careful of is you cannot have the same auditor for your personal files and for the company. RBI is very clear that the auditor should be a separate entity or a person, individual. The same auditor cannot be handling your personal returns and the company's audit, etc.
So thank the panelists, and I end this session, conclude this session only with 2 remarks. One for the members is, it's high time, start thinking get into NBFCs. Otherwise, it will be difficult to carry on the business. And at one time, we may feel that we are not able to continue or exist also. And one for the association, as Mr. Anilji has pointed out, that when the Reserve Bank wants us to give information to 4 companies, at least we should be permitted to give in one form. Let the 4 companies take the data from there. Why should I give 4 different formats to 4 different people?
I believe
This-
it is a single data format, Madan. It's a single data format from hence.
There are issues in the uploading now, not yet fully compliant.
Uploading.
There are still it's not clearly portable, so we should try to achieve that by putting on the RBI as well as the 4 CICs has to come with a common format. Thank you.
Thank you to the panelists.
Let me also bring a positive news here. Based on my limited experience, when we see a lot of government organizations, the legislation coming into picture, during the last decade, it has been noted that the government is proactive, is easily reachable. The representations given are at least considered. And we are very sure to streamline the process, avoid duplication all across the industries. Many of the government institutions have taken this call to synchronize various things, avoid duplications. So I think the day is not far, even if at this minute it is ported. I'm not very sure about the practical aspect on how the credit rating agencies matter are being ported for, but this would definitely be synchronized, and we forecast that there would be automation tools like under a single software porting a data, it would automatically be reaching with all the 4 institutions also. But we need to wait for that for a little while until RBI comes out. So it's not that it is just cumbersome. The government is working to streamline and reduce the burden of procedural aspects. This is what I would like to say here.
Thank you.
Time
Thank
is
you,
up. I want
Anilji.
to conclude, but one thing which was left over, I'll take in my open house session. That was Sarsai.
I request
Central
the
Registry.
panelists to be on the stage. I request Rajeshji Singhvi, President of MAHA, and Somchandji Nahar, past President of MAHA, to present a memento to the speakers, please.